So is the beating Starbucks has been taking today deserved, or is the bear case overdone? Let's bring in Starbucks bull, BofA Securities, Sara Senatore. She's got a buy rating on the stock, maintain her $108 price target after last night's report. Sarah, I don't know if you watched that interview live. It was cringeworthy. How much of that is warranted? How much of that is overdone?
Well, I mean, I don't envy Locks for having had to go through that. But with that being said, I think, the sell-off is far overdone. So what I will say is, we knew that the Starbucks was going to have some difficulties in terms of same-store sales. They'd already telegraphed that on their last quarter, and we can talk about what I think the reasons for. And China, we know broadly from other restaurants, Yum Brands, for example, that's just a difficult operating environment right now. So from my perspective, when a stock sells off the way it did, it typically means it's not just a question about the near term, because obviously guidance was lowered 15% down to sort of low single digit to flat, but questions about the longer term viability of the brand. And I think those are misplaced.
In terms of, to get to Kramer's point about costs, though, are there any levers to pull on that aspect to bring price down, or is that something that just remains elevated because of the nature of the labor costs and inflation remaining high in general?
Well, I'll start by saying, the order that you referred to, right? There's a lot of customization in there when you have caramels and ribbons and crunch, right? So a lot of what you've seen in terms of the price is actually consumers deciding to really customize their order. So when we look at the amount of price that Starbucks has taken on a like-for-like basis, really isn't very high relative to what we've seen from others. So, right now it's about 2% higher than it was last year. There are very few restaurants that only have 2% price. So you're looking at a check that is really a function of what consumers want. And I think what Starbucks is offering is, they're offering some targeted offers through their loyalty, through their app to really get at that. So whether it's a BOGO or 50% off in the afternoon, that's what they're doing to really make that occasion very, sort of very accessible.
So when I think about CEO Laxman's tenure so far, almost from the moment he took over, the results have totally missed what they've told us. I think there's been a very poor communication in the market, and I guess it just gets back to Starbucks versus the consumer, because we all know that the lower end consumer. We've heard from McDonald's, we heard from Mondelez that they need to lower, chocolate chip cookies. I mean, there's a lot of different things going on, but Starbucks should be somewhat immune. I just think about the management team here, and yesterday's, the CFO is the mea culpa was kind of bizarre. Like, this was an awful quarter. We got to do better. This is before this morning's interview. It just seems as if this team seems to be a little flat-footed.
Yeah, so let me start by just backing up in terms of saying why I think that this sort of economic argument is less relevant here. So when you look at their trends were exceptionally strong all the way up through October of last year, and then they basically fell off a cliff. That is not what we see when there's pressure on the consumer or they're feeling like the value proposition has changed. You see a slow bleed. The other thing that you typically see is negative mix. So you see check management, consumers, not ordering that extra pump or that or sizing up. Again, we're not seeing any of that. Actually, check management was absent. Their check was positive, including some price, but also continued, self-selected upselling. So that's why I don't actually think the role of the economy is as pronounced. I think there's some social media narratives that they've also addressed that are much more of the what I will characterize as sort of the acute catalyst for what we've seen.
Sarah, two questions for you really quickly. One is, how much are, sort of smaller mom and pop competition hurting Starbucks? And the second is, are they just having a hard time expanding margins? You mentioned yourself that you're seeing about 2% inflation on sort of their base level of product. Just can't raise the price of coffee that high, so are margins a bigger issue?
So to your first question, when we look at data for this industry, for the segment of specialty coffee, it looks like it's been growing, call it 7% annually for the last 5 years. That doesn't surprise me because younger consumers just like to consume outside the home. So you would expect to see this, like what I'll call a demographic dividend. It should grow faster than the broader restaurant industry. Starbucks has held share that whole time. So we've seen some shifting, some loss from some regional chains, some gains from, upstarts. But Starbucks itself has been pretty stable. So I don't think it's the mom and pop piece. And, that's a good segue to your second point, which is large chains like Starbucks have a huge cost advantage. So if they're feeling pain, smaller independents are even more so. I think there's a lot of opportunity for margin. I think it comes from self-help. So he talked about throughput. Some of that is, equipment that they're doing. And then some of it is just better staffing, scheduling. So I do think there's an opportunity for them to expand margins, even without taking a lot of price.
Just quickly, do you have a sense as to why the occasional customer is just going less? Is it mostly price? Is it the waiting? I'm just trying to figure out how likely is that occasional customer likely to go back and be that occasional customer? Or if we should just write them off at this point.
I don't think you should write them off. And in fact, that's always what we see. Whenever Starbucks same-store sales slow, it's typically that customer, right? Because for whatever reason that things are slowing, they're just less loyal. They're less frequent for Starbucks. So if it were economic, which, again, I don't think it is, that they would be more likely to maybe give up an occasion. If it's this social media issue, which I think is more likely, they're less tied to the brand and maybe less aware of what the true narrative is. So I think they can get them back. I think marketing, I think sort of telling their story is going to be really important.